Welcome back to Investing Talk Podcast. Today, we're tackling a question that's definitely top of mind for many of you. Is Marvell Technology a good time to buy right now? We've taken a really deep look into the available information to help you navigate this, well, pretty complex question. We're trying to uncover not just the numbers, but the story underneath. Our mission today is really to understand why Marvell, a company that's, quietly shifting into an AI powerhouse, has seen its stock take quite a hit this year, even though the underlying performance looks, well, pretty solid. We're going to break down the fundamentals, its market position, what analysts are thinking, and, of course, the potential risks and opportunities. Our goal is simple: give you the clearest picture possible so you feel really informed. But before we unpack all of that, a quick favor. If you're finding value in these deep dives, please subscribe to our show, like this deep dive, and maybe leave a comment with your thoughts or questions. And hey, if you're feeling extra supportive, consider buying us a coffee. It genuinely helps us keep these explorations going. Okay, let's get into it. Marvell Technology, ticker MRVL. It's been highlighted as a really compelling player in the AI infrastructure space. What's particularly interesting, maybe even a bit puzzling, is that despite, a 32% decline year to date in the stock, the actual operational performance seems quite robust. How do we square that?
Well, what's genuinely insightful here, I think, is Marvell's huge transformation. It's almost a complete strategic pivot, really. The company has basically become an AI-first semiconductor provider. I mean, look, their data center segment, it's now 75% of their business. And within that, AI-related revenue is around 50% of total data center revenue for fiscal 2025. This isn't just about following a trend. It shows Marvell's leadership made a decisive early bet on custom AI silicons, specifically for those hyperscalers, the really big cloud providers like Amazon, Microsoft, Google, Meta, that let them build deep, kind of sticky relationships with the biggest players before a lot of competitors really grasped the scale of this opportunity. That early mover advantage in custom chips, it's a real differentiator.
So this isn't just tweaking things, it's a fundamental remake of the company, laser focused on AI. For someone looking at Marvell now, what does this massive pivot really tell us about their strategic agility, especially compared to others maybe slower off the mark?
It reveals, I think, profound agility and foresight. By concentrating so heavily on custom silicon for these hyperscalers, they aren't just selling generic parts. They're becoming embedded partners, designing chips specifically for these giants' unique AI needs. That creates a much, much higher barrier for competitors to overcome. It's a calculated strength, really. It offers potentially strong long-term revenue visibility, even if there's short-term market noise.
That rapid shift to AI revenue is pretty striking. Let's peel back the layers on their financials. The sources mention exceptional revenue momentum, particularly in that core data center segment. What are the numbers actually telling us about their financial health?
Yeah, the financials definitely underscore how successful that strategic shift has been. For Q1 2025, Marvell reported net revenue of $1.895 billion. That's a remarkable 63.3% jump year over year. Their fiscal year 2025 annual revenue hit $5.767 billion, which is a solid 4.71% increase from 2024. These aren't just small gains. They show a serious surge in demand for their specialized chips.
And that data center segment, it really is the engine driving this, isn't it? When you see such a high concentration in one area, does that maybe introduce a specific risk? Or is it actually a strength given where the AI market is?
Oh, it's absolutely the engine. It generated $1.44 billion in Q1 2025 alone. That's a 76% year-over-year increase, making up over 70% of their total revenue. And like we said, the growth is directly tied to AI demand. AI revenue just exploded from less than 10% in fiscal 2023 to about 50% of data center revenue now in fiscal 2025.
Yeah.
Now, you're right, concentration can imply risk sometimes, but in this case, it really indicates Marvell's focused execution on the highest growth, most critical part of the semiconductor market right now, which is custom AI chips for the biggest cloud players. So I'd argue it's a calculated strength.
Okay, beyond just the top line revenue, how are the profit margins holding up? Did this big pivot come at a cost to profitability, or are they managing that transition well?
That's a great question, and actually profitability is in significant improvement, which is crucial, right, given the investment needed for a shift like this. Gross profit margin hit 50.3% in Q1 2025. That's up from 45.5% last year. And they've swung from an operating loss of 13.1% in Q1 2024 to operating income of 14.3% in Q1 2025. Net income, it turned positive. $177.9 million in Q1 2025. That's a huge turnaround from a $215.6 million loss the year before. That translates to earnings per share of $20 versus a loss of 25 cents. So
Yeah.
yeah, it really reflects better operational efficiency and the leverage they're getting from higher sales.
Wow, that's quite a swing from loss to profit in just a year. What about their financial flexibility? Things like debt, cash flow. Are they building a solid foundation for what comes next?
They seem to be building a pretty robust foundation, yes. Marvell keeps a, let's say, conservative debt profile. Their debt-to-equity ratio was 0.32 as of April 30, 2025. That basically means they have relatively low debt compared to their assets, suggesting financial stability and, room to borrow more if needed down the line. Looking at the balance sheet, total debt is around $4.1 billion against shareholders' equity of $13.3 billion. And importantly, they're demonstrating strong cash generation. Free cash flow was nearly $1.4 billion for fiscal 2025. That's up over 35% from the previous year. Operating cash flow hit $332.9 million for Q1 2025. This steady cash flow gives them vital flexibility for R&D and other investments in this super competitive space.
Okay, so the financials seem to be heading in the right direction, and they're clearly focused on AI. But, this industry is packed with innovators and giants, especially someone like Broadcom. The big question is, what's Marvell's real edge? What gives them that durable advantage beyond just the numbers?
Right, and that really gets to the core of the investment thesis here. Marvell has managed to position itself as a critical partner for those hyperscalers building out AI infrastructure. Their advantages come from a few key areas. First, a deep IP portfolio intellectual property covering computing, optics, networking, storage, security. It's not just patents, it's a whole toolkit for custom solutions. Second, they've got that proven track record with the big cloud players, Amazon, Microsoft, Google, Meta. Those relationships are incredibly valuable and, frankly, hard for competitors to break into. They also have leading-edge tech capabilities. We're talking 2nm custom SRAM, advanced packaging. These aren't just buzzwords. They represent the absolute frontier of chip design, letting them make smaller, faster, more efficient chips. And crucially, the customer relationships are strong. They talk about 18 socket wins across hyperscalers, with 12 already in production. A socket win basically means their chip got designed into a major server for one of these giants. It's direct proof they're deeply integrated into their customers' AI plans, making them difficult to replace.
They definitely sound like they have the tech chops and the customer relationships locked down. So, given all this positive momentum, how does Marvell's current valuation actually look? Does the market see this value, especially when you put it next to its peers in the semiconductor world?
Well, when you look at the valuation ratios, it gets interesting. Their trailing PE ratio is technically a loss because of past performance, sure. But their forward PE, looking ahead, is 25.4 euro. Their price-to-sales ratio is 9.4. Price-to-book is 4.57. Enterprise value to revenue is around 9.5x.
Okay, and how do those numbers stack up against the big names, like, say, NVIDIA and Broadcom, often seen as the premium AI plays?
And this is where it gets pretty compelling from a value perspective. Compared to those premium AI peers, Marvell's metrics suggest it's trading at a significant discount. For instance, that price-sales ratio of 9.40, Broadcom's is 21.34, NVIDIA's is 24.10, big difference. Similarly, its forward PE of 25.40 is considerably lower than Broadcom's 43.16 and NVIDIA's 45.34. So what this implies is the market might not yet fully appreciate Marvell's strategic pivot and how embedded they are in this AI build-out. It suggests there could be some undervaluation there given their position and growth path.
That's a noticeable gap. Are analysts generally optimistic about future earnings then? Or are they still a bit cautious despite this transformation?
No, analysts are definitely optimistic about significant earnings growth ahead. The consensus estimates are for $2.16 DPS for fiscal 2026 and $2.78 for fiscal 2027. So that current forward PE of 25 lira looks quite reasonable, maybe even attractive when you factor in that expected growth driven by all the AI infrastructure spending.
Okay, but the stock itself has been on a bit of a roller coaster this year, with that 32% drop. What does the technical picture tell us? Anything from the charts about recent action or potential recovery?
Yeah, Marvell has definitely seen considerable volatility in 2025. It hit an all-time high of $127.48 back in January, before pulling back to where it is now, around $74.95. Now, while the stock is down over 32% year-to-date, that kind of significant pullback could present a potential entry point for long-term investors maybe looking to buy on weakness. Looking at the technical indicators, it's kind of a mixed picture right now. The RSI, the Relative Strength Index that helps gauge if a stock is overbought or oversold, is at 67.71. That's pretty neutral territory. And the MECD, which tracks momentum, is positive at 0.71, suggesting maybe some underlying upward pressure. The price is above its rising 20-day and 50-day moving averages, which is good short-term, but it's still below the rising 200-day, meaning the longer-term trend is still kind of finding its feet. Stochastics, though, are high at 86.5. That could indicate it's a bit overbought in the very short term, maybe suggesting a brief pause or consolidation could happen.
So a developing short-term uptrend, maybe, but the longer-term picture needs a bit more confirmation. What about recent news? Analyst sentiment. Are they sticking with it despite the price drop?
Wall Street seems to be maintaining strong confidence, actually. You've got 29 analysts covering the stock, and the consensus rating is a strong buy. The average price target is around $100.66, which implies, about 34.3% upside from where it is now. And there have been some positive recent developments. They had that Custom AI Investor Day just recently, June 17th. They showcased their AI capabilities and announced a bigger total addressable market, $75 billion by 2028. That's a significant boost. Plus, they introduced the industry's first 2nm custom SRAM technology. That's a major technical milestone.
That market expansion news does sound pretty big. What about signals from inside the company? Any significant insider buying or selling that gives us a clue about management's confidence?
The signals there are a little mixed. You had a director, Bradley Buss, buy about $207,000 worth of shares back in March. That's usually seen as a positive sign. However, several executives, including the CFO and COO, have sold shares, totaling around $32 million over the last 12 months. But the analysis suggests these sales are mostly routine things like exercising stock options and related to compensation packages. That's pretty common for executives and doesn't necessarily mean they lack confidence in the company's future.
Right, often planned sales. Okay, looking ahead then, what are the key catalysts? What could really push Marvell higher and keep this growth story going?
There are several potential catalysts on the horizon. Short term, the big one is the Q2 2025 earnings report that's coming up August 27th. It's expected to show continued strong data center growth, with guidance around $2.7 billion in revenue. We also expect to see continued volume increases from Amazon's next-gen AI chips rolling out, and the initial deployment of those faster 800G and 1.6T optical DSPs. Those are critical for speeding up data transfer in AI systems.
And thinking a bit further out, beyond just the next quarter.
Medium-term catalysts include the scaling up of Microsoft's custom AI chips, which are built on Marvell's platform. Also, the ongoing expansion of their custom ASIC pipeline, basically, winning more design deals with more wins ramping up through 2026-2027, and further adoption of their new 2nm process node technology long-term. We're looking at that total addressable market for custom AI chips potentially hitting $55 billion by 2028. Plus, continued AI-driven demand transforming data centers, and maybe even new applications emerging in areas like vehicle-to-everything communication, 5G satellite links, and 5G IoT markets. That could broaden their reach quite a bit.
It's definitely easy to get swept up in the excitement of growth and transformation stories like this. But, as we always say, no investment is risk-free. What are the key potential downsides? The headwinds Marvell faces that listeners really need to keep in mind.
Absolutely. You've got to balance the opportunity with the risk. For Marvell specifically, there's that heavy customer concentration we talked about. Relying so much on a few huge hyperscalers is great for growth, but it also means revenue could get volatile if one of them cuts back. There's also potential pressure on margins from these custom chips as they scale up. Sometimes they carry lower margins initially. And just the sheer pace of AI innovation means they need constant, heavy R&D investment to stay ahead. Falling behind technologically is a big risk.
Okay, those are company-specific. Are there broader industry or macroeconomic risks that could affect Marvell too?
Oh, definitely. Sector-wise, you've got the classic cyclicality of the semiconductor industry. Booms and busts are common. There's also the reliance on Taiwan-based manufacturing, primarily TSMC, that carries geopolitical risks, operational risks, and general supply chain vulnerabilities are always a background concern, macroeconomically. Trade policy uncertainty, especially U.S.-China tensions, could impact their operations or costs. Higher interest rates could potentially put pressure on valuations across the board and maybe slow down customer spending on big infrastructure projects. And, broader geopolitical tensions can just disrupt global supply chains and markets unexpectedly.
And what about the stock's own choppiness? How does its volatility factor into the risk for someone thinking of investing?
Yeah, Marvell is definitely a high volatility stock. Its beta is 2.55. That means it's significantly more volatile than the overall market. A beta over 1 suggests higher volatility. 2.55 is quite high. It's made over 31 moves of more than 5% in just the past year. So you have to be prepared for potentially big swings. On the plus side, its average daily trading volume is high, around 19.27 million shares. So there's plenty of liquidity if you need to get in or out.
Okay, So pulling all of this together, the growth, the pivot, the valuation, the risks, what's the overall takeaway? What's the investment recommendation based on this deep dive?
Well, the overall rating we came up with is a 7.5 out of 10. The thinking is Marvell represents a high-quality way to play the AI infrastructure build-out, and it's trading at what looks like an attractive valuation after that recent pullback. Its strong fundamentals, its leading position in custom AI chips, and that robust growth outlook, they all support a positive long-term investment case. However, the near-term volatility and those execution risks tied to pulling off this rapid pivot are real, and that prevents a higher rating for now.
A 7.5 out of 10. So for listeners who might be considering an entry point, are there suggested ranges to think about?
For what might be an optimal entry, perhaps the $65, $72 per share range looks interesting. If you're more aggressive, maybe the $60, $67 range, which is near some key technical support levels. For a more conservative approach, maybe current levels around $70, $75, but perhaps waiting for confirmed momentum could be an entry point.
And what's the recommended time frame here? Is Marvell more suited for a short-term trade or a long-term hold?
The core investment case for Marvell is really driven by that long-term structural growth in AI spending and its strategic ties to the hyperscalers. So therefore, it seems better suited for long-term investors. We're talking typically a 12-month plus horizon, people who can stomach those near-term ups and downs. While, yeah, short-term trading opportunities might pop up because of the volatility, the fundamental story, the transformation, the big investments really favors patient long-term investors.
That really paints quite a comprehensive picture of Marvell Technology, doesn't it? You've got this mix of strong fundamentals, what looks like an attractive valuation, and significant long-term growth potential. It certainly makes it seem appealing, especially if you have the right risk tolerance in that longer time horizon.
It's truly fascinating, I think, how this rapid AI evolution creates both just immense opportunity and at the same time significant volatility.
Yeah.
It really challenges investors to tell the difference between a temporary dip and a real fundamental problem.
So as you're processing all this information, maybe here's a final thought for you to consider. In a sector that's as dynamic and frankly as transformative as AI infrastructure, where a company like Marvell is making such a huge pivotal shift, how do you personally balance the allure of that long-term structural growth story against the unavoidable reality of short-term market swings? What really stands out to you from our discussion today? Thank you so much for joining us on Investing Talk Podcast. We really hope this deep dive has helped you gain a clear understanding of Marvell Technology. We'll be back soon with another deep dive into your most pressing questions.